Welcome to Markets Now. I'm Michelle Rourke with Brad Koima of Koima Varlick. And after kind of a mixed start this morning, we're seeing quite a bit of green on the board. And Brad, thanks for joining us. Let's talk about the cattle market. We did have a correction in the market last week, lower weekly closes in the futures, but we did kind of hold support at those trend line areas that we needed to. Are we out of the woods yet, technically, do you think?
Well, thanks for having me on. As much as I enjoy being a glass half full guy, and I'd like to, climb right on that comment of, are we out of the woods? I don't know that I have that much confidence yet. After being out last week, I came in here Saturday and, tried to just kind of with a, quiet look through all the charts and different things like that. And I agree with you. There's a couple of things chart wise that give me some real encouragement. You pull out a weekly chart and we're holding right along a very nice orderly uptrend, a trend that's been that way for several weeks, and so far so good. April being a $4 discount is going to be a problem here because that might create a problem here when February goes off, but that's something we can worry about in 3 weeks. I also thought that where the market fell, it didn't take us long to get oversold after being overbought. So like, for instance, April cattle, those lows that we made there last week happened to be just a hair above the 38% retracement of the whole leg up. The summer low to the high we just made, also tracking along the 40-day moving average, a good, nice place to stop, right? The Fed cattle also, I can come up with a near 38% retracement for where they held. So I don't know, in my own mind, I thought coming in this morning, I thought, well, man, maybe don't be quite so negative this morning, Brad. Seeing if we can't get a little bit of a bounce, and I think that's what we're getting. What probably troubles me about the market is this is 2 weeks in a row where they've gotten the cash cattle lower. I think you could tell you that most futures traders would say, well, let's see, it was too lower last week, too lower the week before, so I suppose it'll be too lower this week. And, they start to give an excuse for a reason why the market's discounted and justifying the fact that it is. I'm not saying I agree with that, but that's the way the market seems to work. That, and maybe the most important thing, has been the drop in the open interest, I think, Michelle.
Yeah. So you mentioned cash as being one of the things that weighed on the futures, but we had a lot of other bearish news, including on the top of the list, kill cuts. Talk about where we're at with that.
Yeah, there was plenty of bad news to go around, especially Thursday. Couldn't help but kind of chuckle, thinking I'm glad I wasn't part of the presentation. I was sitting through the cattle factor presentation at the NCBA convention, which of course, all the statistics are friendly. I've been sharing them too. So, but yeah, kill cuts, you got a couple of majors that are talking 32 hours, and looks like it's happening this week. So you've got a regional that's killing 3 days this week. So typically the response to the futures market is that kill cuts are bearish because we're going to back up cattle. Well, that's not going to happen in one day. And the show list up here this week are record small for the people that I talk to around here. The show list in Northeast Nebraska that I'm familiar with is also very small. So kill cuts are a function of the available supply, in my opinion. So what will next happen, I think, we'll go kill cuts for a couple of weeks. You'll see the beef go up sharply because of the less product offered, and then they'll have to make that decision. Do they come chasing right back after it? Mexican border, Canadian border, also a factor.
Right.
And then the other thing I think is and this troubles me too, this continued nagging gorilla in the room. We can't seem like we can go more than a few days without having to talk about something about bird flu. And of course, that's was part of the market here at the end of the week last week, and that story kind of circled around this weekend.
Right. And of course, we had a new variant or a new strain, and that's kind of what's reigniting the discussion about that. As far as the Mexican cattle situation, how many cattle are coming across the border right now? How orderly is that happening?
It's kind of interesting you asked that. I actually stood in line for lunch behind a gal that's her job. She's got a company that buys cattle out of there and imports it. So what started out to be 500 a day, no big deal, quickly morphed into 5 or 6 times that, I think. probably something more like we're close to 3,000 a day now. So they've got this system figured out. It's coming a little bit quicker than maybe I suggested it was going to.
You bet. Okay, so one thing I probably should have asked you earlier, but the funds are liquidating in the cattle, but not a great amount. So that's the other fear that we have here, is that they head for the door at the same time, right?
Exactly. And I think it's a good point. I think it may be, unfortunately, whether you like it or not, maybe that's the most significant thing. As much as I like to talk fundamentals, the funds still have an awful lot to do with price action. And I like to say they didn't get in a day and they can't get out in a day. So starting to see that little, crack in the armor would make me worry that there's a little more to come. Now, I would say if we take out last week's low, you're going to see another little bit of a gush. You'll see another round of liquidation. It does help that we're trading this steep of a discount. And I do have confidence that there isn't a big supply of cattle in the north here moving forward. So we'll sort this thing out. I just feel like we need to be a little bit careful here for a week or two even. You're going to hear the seasonal guys chirping, third week of February seasonal highs, and they're right. It's in the book. I mean, that doesn't mean it always happens, but there's some of that chirping that's going on too.
And hogs, we had a higher weekly close last week, despite all the uncertainty about tariffs and the fact that we actually put some on China. How much of a surprise has that been?
I guess I should say nothing surprises me on the hogs, but I'm afraid it does.
Yeah, we always say you can't trade them. So,
I mean, if you say black, they trade white. I have a hard time trading the hogs. The fundamentals don't seem like they match up on a daily basis with price action. With the ramped up talk about tariffs with China, that's a big deal. We sell a bunch of hogs to China. I'm surprised that the market so far has been able to say, well, it doesn't matter. We're going to be okay. We'll see. I hope they're right. I look at the April hogs where the open interest is, though, specifically, we're right up into an area of resistance here. This is where we failed before. We're very close to the highs. I'd have a terrible time wanting to buy the market here up against this kind of resistance. I don't know, short term, I think the market has a little bit more room below us. Now, we are very aware here, because we're in a hog production area, that there's a very real issue with PRRS. There's a real issue with sourcing feeder pigs again, tight supply. So as we look toward into the summertime, I guess I'm not going to say I'm really negative for that time slot, but I just wonder in the here and now if we're not fully priced.
Yeah, I'm with you. I've been watching that resistance area. We need to take that out here to keep the funds in that market as well. Okay, grains, despite all the uncertainty about tariffs, about the report tomorrow, about South American weather, we had higher weekly closes across the board on last week. So that market just continues to march along here, doesn't it?
Well described. Grinder. And sometimes I think those are the best kind, where the market absorbs the selling and just, we don't care. I mean, we've seen some softness in the basis on the corn, and the market kind of continue to grind along here anyway. There's uptick in the farmer selling, and yet we continue to do that. I think there's a decent story on the old crop corn, and I think it starts with the fact that I would say that the crop size of last year probably wasn't as big as described, and that's what they're starting to let on. And world stocks of corn also in a very solid, tight situation. I would have less confidence, unfortunately, on the beans. I sound like a broken record, even though the beans do trade a little better than I thought they would. But I think we still have to. The market has to deal with the fact that let's find out how big Brazil's crop is and how quickly they want to market it, and whether or not we still got a good, reliable trade partner with everyone, most especially and importantly China.
Yeah, and despite all that, the funds have still pushed even longer in the corn market. They push longer in soybeans, and you don't want to get in their way. Are they buying from an inflation standpoint? Are they concerned about that, or what?
Yeah, you're not alone. I think you bring up a good point. Maybe that is the underlying undercurrent. Yeah, throwing soybean oil there too, I guess, right? But
right.
Yes, are we getting the indication from that segment of the traders that it looks like, unfortunately, this inflation thing is on an uptick again, which means bad thing for those of us that borrow money, and that's what's driving the bus a little bit. It might be because, like, some of the core fundamentals, to me, the market is maybe outkicking its coverage a little bit in terms of what the fundamentals would suggest.
Yeah, well, we got to get above some resistance areas here as well in corn and soybeans and decisively close above those to keep going too. All right, thanks so much, Brad Koima with Koima Varlik. That is Markets Now.